Hello, friends. If you are over 60 and you own your home, stop what you are doing and stay with me because this affects you directly. And most of the people it affects have no idea it is coming until the moment it is too late to do anything about it. Picture the envelope. It is sitting on your kitchen table right now, or it will be soon. Plain official looking from the county. You open it, and the number inside says your home is suddenly worth far more than you ever paid for it. And your stomach drops because you already know what you are thinking. If the house is worth more on paper, the tax bill is about to climb, and you are living on a fixed income that does not climb with it. That quiet fear, the one that keeps a homeowner awake at 2 in the morning, is the fear of being slowly taxed out of the home you already paid off. The home you raised your family in. The home you assumed was finally completely yours. And here is the part that makes it worse. A great many older homeowners, when that bill feels unfair, do nothing. They assume fighting it is pointless. One person in the comments put it plainly. They said, "The appeals are a joke, the review boards never change anything." Another said seniors on a fixed income simply will not be able to pay and could lose their homes over it. I read every one of those comments and I understand the fear behind them completely. But I need to tell you something gently and clearly because it matters more than almost anything else you will hear today. Most of that fear is built on a misunderstanding. A higher value on paper does not automatically mean a higher bill. And the appeal that everyone calls rigged is lost most of the time for one specific and completely fixable reason. By the end of this, you will know exactly what that reason is, and you will know which steps can stop that bill from climbing at all. So stay with me, because the part most people get wrong is the part that costs them the most. Let me start with who this hits hardest and then exactly what can go wrong so you can see yourself in this clearly. If you bought your home many years ago, if you are on Social Security and a modest pension, and if you have significant value built up in a house you do not want to leave, you are exactly the person these rules were written to protect, and also exactly the person most likely to miss the protection. So let us walk through it one piece at a time. The first thing to understand is the machinery itself, because once you see it, the fear loosens its grip. When people say their home was reassessed, they hear it as their bill going up. But there are 3 completely separate numbers in play, and they do not move together. There is the market value, which is what your home might sell for. There is the assessed value, which is the number the county actually uses for taxes. And there is the millage rate, which is the figure the county multiplies against your assessed value to calculate the bill. A reassessment can raise the assessed value, while exemptions freezes and the rate sitting in between soften or even cancel what reaches your actual bill. Write those 3 words down somewhere. Market value, assessed value, millage rate. 3 different numbers. Confusing. The first one for your bill is the single most common mistake, and it is the reason good people panic when they should be picking up the phone. Now, here is the lever almost nobody mentions, and it is the one I most wish someone had explained to homeowners 10 years ago. Many states offer an age-based freeze that locks the taxable value of your home in place, regardless of how high the market climbs around you. In some of these programs, there is no income test at all. It does not matter how comfortable you are. You qualify because of your age, and your frozen value simply stops rising. In Texas, for example, once you reach 65, your school property taxes are frozen at the level you paid that year, even if your home doubles in value. Arizona has a similar protection that locks the value for qualifying seniors. These freezes are real, they are official, and the catch is always the same. Nobody applies them for you. Your county does not look at your birthday and quietly hand you the discount. You have to ask. So before anything else, ask your county assessor's office whether your state has an age-based freeze and whether income matters for it. Let me tell you about Carol, and I want to be honest with you. Carol is an illustrative composite, not one real person, but her situation is one I have seen described again and again. Carol is 71, retired, living on a single check. She opened her reassessment notice, felt that same stomach drop, and nearly slid it into a drawer to forget about it. Because she was certain appealing was useless and certain she earned too much to qualify for help, she was wrong on both counts. Her state had a freeze with no income test, and once she filed for it, her taxable value stopped climbing. One phone call she almost never made. That is the entire difference between staying and being forced to sell. Now to the appeal, the one everyone in the comments calls a joke. Here is the truth that the angry comment threads never quite reach. The appeal is not rigged, but most people lose it for one reason. They walk in without the one kind of evidence that actually works, which is recent sales of comparable homes near you, similar in size, age, and condition that sold for less than the value your county is now claiming. When you bring those comparable sales, you are no longer arguing your feelings against the board. You are showing them a number they have to take seriously. The filing fee is usually small. The deadline to appeal, often somewhere between 30 and 60 days after your notice arrives, is the part that quietly traps people. Miss that window, and you are locked into the new value for the entire cycle. So ask your assessor's office for recent comparable sales and ask for your appeal deadline the day you open that envelope. There is a second protection many people are silently losing, and it is worth a moment. Nearly every state has senior relief programs, but the income limits for many of them were set years ago and never adjusted for inflation. So ordinary cost of living raises in your Social Security can push you over a line that nobody updated, and you get told you no longer qualify. If you were turned away years ago, do not assume that is still true. Several states have revised their limits recently. Reapply or simply ask your state's Department of Revenue what the current threshold is. The program that shut its door on you a few years ago may be open again. And if even a frozen or reduced bill is still hard to carry, there is one more path. Many states run a property tax deferral program through the county treasurer's office. It does not erase the tax. What it does is let a qualifying senior postpone the increase, repaid later from the proceeds, when the home is eventually sold with a modest interest charge. For someone determined to stay in their home, that can be the difference between staying and being forced out by a bill that arrived faster than the budget could stretch. One last thing, and it matters if a reverse mortgage is part of your picture or your parents'. Under the federal rules from the Department of Housing and Urban Development, that home must stay the primary residence. Being out of it for 12 consecutive months in a row, even for medical care, can make the loan due and payable. And falling behind on property taxes or insurance can too. The part most families miss is that the lender can often give you a chance to fix it first, but only if you reach out before a formal notice arrives, not after. So let me bring it all together simply. If you own your home and you are over 60, do 3 things. First, call your county assessor's office, ask for your new assessed value, and ask for your appeal deadline. Second, ask your state's Department of Revenue which senior exemptions and freezes you qualify for, especially any freeze that ignores income. And third, before any major decision about your home, sit down with a licensed professional who knows your full situation. Nothing here is a promise of a specific amount, and none of it is personalized advice. It is the map nobody hands you. If only one part of this stays with you, let it be this. Go back and remember the comparable sales, because that single piece of evidence is what wins an appeal. And the appeal is the thing most people wrongly believe they have already lost. Share this with one homeowner over 60 who would never think to ask. And subscribe, because next I will walk through the freeze and exemption deadlines state by state, so the calendar never catches you by surprise.